Welcome to Markets Now. I'm Michelle Rook with Arlan Suderman of StoneX. And Arlan, a mixed day of trade in both grain and livestock. I want to start off in the grain trade first of all. Soybeans a little bit of a bounce. So we're still kind of under that $13 mark. But was it short covering, or was that market putting in some South American weather premium?
Yeah, a little bit of weather premium in there. It's been dry in Mato Grosso, the center west area of Brazil. That's the most productive area of Brazil for corn and soybeans. That's where we've seen some delays in planting overall. And of course, much of Brazil's seen some delays. Not really a concern yet, but if those delays continue to mount over the next week to 10 days, then it starts being a greater concern for the safrinha corn crop. And you also start raising concerns of what does dryness do longer term. Right now, our team in Brazil says not too concerned, but keeping their eyes on it. Good 1 to 2 inch rains are expected over the next week or so. If those rains verify, they feel like they'll be in good shape. But the problem is the forecast models have not been verifying of late. And so that's what we really need to see. That'll have a big impact on where China goes to fill its needs for late November shipment, December and January shipment. It's bought very little what it needs for shipment in December and January yet. That'll have a big impact on the price outlook going forward for U.S. soybeans. So watching closely whether we see the rains verify or not in center west Brazil over the next week to 10 days.
No doubt. And then soybean meal gave us a nice push, didn't it?
Yeah, soybean meal demand has been real good. Soybean oil demand has been softer than what supply is. We're really ramping up crush right now. When we look at corn and wheat, though, they're just kind of trading what we're seeing on the crude oil market, macroeconomic concerns. The Middle East war adds to that. So as long as the Middle East war stays contained, the focus will be on the drag on the world economy. And the drag on the world economy means less demand for commodities. That's kind of the way the funds interpret it. So overall, we're facing headwinds in the commodities. It's just that soy meal and soybeans right now have better fundamentals to try to hold up against those.
So what about corn and wheat? You say that that's a macroeconomic concerns there. Funds are already short in those markets. Do they keep pushing the short side of that market?
I think one thing that'll keep them from being too aggressive is the uncertainty that we're seeing in the world, especially when we look at the Middle East. Now, that doesn't directly impact corn and wheat supply or demand, but it does directly impact energies. And anything that impacts energies can also trigger demand for what commodities go into biofuels. So they'll be keeping their eyes on it. That's on the positive side, supportive side, if you will. On the negative side, the closer we get to November 17th with some of the dysfunction in Congress, which has been mentioned as an item by the credit rating agencies, that raises the risk that we could see a credit downgrade, another credit downgrade. That has in the past been very bearish for the commodities, including the grain and oil seeds. So there's a lot of headline risk here. We've been used to it for the past 1.5 years for the Black Sea, but now we have to add in the Middle East as well as the credit rating risk.
Corn obviously seeing a little harvest pressure too.
Yeah, certainly so. And that should ease back this week as we slow the harvest as rains move into the Midwest. Those rains, of course, first hitting in central western areas and then kind of spreading to the east. So the east will have a little bit more time to try to catch up with harvest and get more into bin. But overall, those rains look like they're going to hang around for the next couple of weeks. So that should slow the movement of cash grain during that period of time.
Cattle market trying to recover today after a real big meltdown yesterday on the cattle and feed report bearishness. Do you anticipate, this market is going to continue to see pressure now?
In the near term, I think we're vulnerable because of the chart damage we've done. Now, the cash market, we're still holding out hopes of being able to get some pretty good money there. The concern or where it could lead to weakness is those feeders who have hedged their supplies, seeing some good basis opportunities and go ahead and let go at lower price levels. Fundamentals really haven't changed that much. What the report showed is what's actually in the feedlot already. So it didn't change the current scenario. It did tell us that we're going to have more cattle available over the next 6 months than what we anticipated. But beyond that, we're really looking at even tighter supply. So it was bearish near term, bullish long term as we look at, we haven't even started rebuilding the cow herd yet. In fact, this data shows that we're still liquidating or still decreasing the size of the breeding herd. So this is even more supportive longer term. So I think we overdid it yesterday, but we did the chart damage. The funds are going to respect that chart damage until the cash market can drag us back up again.
Okay, let's hope we can recover here soon. And the hog market, we're just barely off contract lows. How much more pressure do you think we need to see in this market?
Well, we've topped 2.6 million head slaughtered 3 out of the last 4 weeks. And the biggest 8 supply numbers are probably coming in the next 8 weeks. So we've got a lot of supply to work through here over the next couple of months. Then we should see things start to improve overall. The market knows that. That's not a hidden secret from it. It's something it's been pricing in. Overall, demand has been decent. It's been good. One of the things to keep our eye on is the bird flu situation and how much that increases this winter. As we know, that tends to increase then as we cut numbers into poultry supply. Then we tend to move toward the pork supply and help the support demand there.
Yeah. Hopefully the futures discount to the index will start holding here pretty soon, though. All right. Thanks so much for joining us, Arlan Suderman with StoneX, and that's Markets Now.